Welcome back to yet another exciting episode of your favorite podcast, Market Watch, proudly brought to you by the Africa Economic Development Strategies. And we are talking and addressing some of the pertinent issues in Zimbabwe's economic sector. Now, in the past 2 weeks, we have had conversations around the economic development in the country, forecasting based on the report that your organization produced, and that is the Zimbabwe Economic Pulse Report. That was delving into details of the currency situation, monetary and fiscal policy issues, and just the general outlook forecasting what we are looking at in terms of growth and development in the country. And we have had questions that have been raised on these platforms. And today, Professor Mugano is going to start off by addressing those. Professor, welcome to Market Watch.
Thank you, Rumbi. It's my pleasure.
So one of the first comments that came through on the program was coming from Tinashe Nyamunda, and he says, I commend you for the podcast and the AEDS, Professor Mugano. Well done.
No, thank you.
A very rare pat on the back there. And you have my support. So my questions here are not a criticism of your great work. They are meant as positive critique.
Mm-hmm.
Having said this, the point on stability and nursing the economy.
Mm-hmm.
How does one create jobs without demand with respect to the good work you're doing, Prof? If people are poor and they can't save and have no disposable income, where will the demand that would drive investment come from?
Well, thank you very much. I think Tinashe has got a point. Any economy requires demand to push production and you push growth. I think it's a process, must admit, that we need to also bear in mind and understand where we're coming from. We had a double tragedy of no demand,
Mm-hmm.
right? And also economic instability. So clearly, the Zimbabwean growth trajectory was under threat. So I think at least we've addressed one side, and we are still consolidating that achievement of economic stability. And we should then move to guarantee jobs, because clearly you cannot have jobs when there's instability. We have seen it in the lost decade of 1998 to 2002. That was the worst period where we lost virtually the whole industry because of instability. So it's a process. This in economics, it's a build-up actually, and we should actually be happy that at least we have addressed one very critical fundamental, which is important for creating the necessary condition for creating jobs. But I must say that the market there is not really dead to say there's no demand. We are not at a point where we must be. And that lifeline, which is there in terms of demand, how do we see it? We see companies which are reporting their figures, Delta Beverages, sales increasing by double digit in 2025. Last quarter of the year, my hair increased by 100%. It's demand. And other lines by 21%, 18%. So is African distillers, PEPs. A number of companies are reporting that they're quite bullish. But I think we can build on that. By any chance, I'm not denying or rejecting what Tinashe is saying, but I'm simply saying that it's something I'm also sure that everyone have got a lot of keen interest around to have higher demand, to create jobs, to address poverty. And it can be addressed overnight. And where we are, we'll just get stability in 16 months, 17 months. And we need to continue in that direction. And in the process, we'll be addressing. By the way, poverty, people in extreme poverty in 2023 were 49% of the population in extreme poverty. The current figure now of people in extreme poverty is 43%. So already you see there's a recovery. People who are getting out of extreme poverty is 6% now of the population. It's a small jump, small improvement, but in the right direction.
I was going to ask you, Professor, that you are saying in 2023, and now we're in 2026, 3 years later,
Yeah,
and the marks have only gone down by 6%.
correct.
But moving on, there's another question that's coming in, and it's saying a rising tide raises all boats. To what extent is the current run more of a product of the high commodity prices of gold and tobacco?
So it's a combination of factors. Gold clearly has got a major contribution in terms of driving more exports. I must say that 53% of our mineral exports is gold, and 48% of total exports is gold.
Mhm.
There's a difference between total exports and mineral exports. But our report showed that mining sector, agriculture, tourism, are major drivers of growth.
Mhm.
And this has nothing to do with gold. When you look at tourism, agriculture, in fact, horticultural exports were more than $100 million for the first time. So it's a balanced. There are many factors, but also stability is a major driver of growth.
Mm.
Because if you have instability, clearly it will be difficult to have economic growth.
And then Josh, this is more of a comment than a question. Josh is saying public financial management rules violation in Zimbabwe is deliberate due to corruption. ZAC is not doing its job. I think this is a conversation that would want the Zimbabwe Anti-Corruption Commission to join us and just tell us a little bit about some of the efforts that they're making to end corruption in public and private institutions in Zimbabwe and see if what Josh is saying is really translating to what's on the ground. We do have more sentiments coming through, and this one is coming from Godfrey Nuve, and he says, apart from sentimental value of gold, should developed countries stop buying gold? Does gold have any use to us as Africans without demand from developed countries?
No, thank you very much. I think that's an interesting question. But what we must remember is that we are in a global village. Um, Developing countries alone cannot balance the whole global economy, and we cannot feed ourselves. We cannot sell to ourselves. The essence of trade is to driven from the point of specialization and comparative advantage. We have gold. Those who don't have gold have to buy from us. We don't have motor vehicle industries. We have to buy from them. So the question has to balance along the way. So gold is the new asset which is being used by central banks to hedge against any risk. And because of geopolitics, mainly because of the America weaponizing the US dollar in particular, central banks have been moving towards gold as a safe asset. And we've seen in recent years and recent months massive procurement of purchasing of gold by China in particular. And any well-meaning planning, cautious central bank will go for gold. We also have to amass gold as a country. And I also hope that our banks also start now supporting gold production and also building their assets in gold. Is the new direction, particularly now when the US dollar is also weakening. So the weakening of the US dollar is also becoming a threat to us. We love the US dollar because it's a currency of choice. And many people don't understand what's happening in the global market. And the US dollar is weakening, and you are holding a currency which is losing value every night. So you're better off with gold. Now, West Street, there are projections that by the end of the year, gold might be selling at $10,000 an ounce. Right now, it's around 5,000. So who will be richer? Who is holding the US dollar? The one
Well,
who's holding
the
the
gold.
gold. Yeah. So there's a real value. It's not sentimental value.
And another question from Nyambara Wenze says, Professor Mugano, to what extent is corruption going to affect ZIG stability? Is this not just a bubble? Be honest.
Thank you very much.
I have to emphasize on the be honest part
Thank you
because
very
I
much.
think he wants the real and candid
Yeah.
talk.
So the honest thing is that I think let's look at it here this way. Corruption is a cancer, and we don't condone it. And in our previous podcast, I think we went to town emphasizing the challenges of corruption, and we recorded it as a primary risk in our economic stability projection. And our cry to government is that they must stop this abuse of public finance management system, particularly where ministries, departments, and agencies are not complying with the public finance management systems. We have a debt of around $1.3 billion as of last year by 3rd September, emanating from non-compliance by government ministries, and that's a challenge. So you hear in the market people saying Treasury is not paying. Treasury, sometimes they are faced with a situation, according to reports, where ministries assume the debt and overspend beyond their budget. And how do you think Treasury will pay that amount of money? So it's a risk, and the government must deal with it.
Right. Before we just close off this round of questions, there is a very long comment. I'm going to try to go through it quickly. And it says, I found the conversation in episode 1 interesting. However, episode 2 has revealed 2 concerns for me. Professor Mugano appears to invest a lot of confidence in the IMF's staff monitoring program and suggests that the economy is bullish. Commodity markets may be because of the price of gold and tobacco. But this is because of high global commodity prices. On the other hand, the value of the US dollar is declining, like you mentioned, against other major currencies. A rising tide, again, it comes back to that. So he then goes on to say, this is a debate which I think we must have. And I think Professor Mugano and AEDS must open up their space for such debates to have more depth about these conversations on the Zimbabwean economy. It may provide perspectives that their think tank may not even be considering, but which speak to issues that may demand government attention to address. Definitely, we are raising issues of concern. We are going to have different government departments also addressing some of the issues. Captains of industry will be coming through, and we'll be having those sit downs with them to interrogate the trending issues in the Zimbabwean economy. And maybe this last particular one is speaking to what we want to discuss today, and is saying, what was the money that later became debt used for in Zimbabwe? But before you respond to that, I just want to say good afternoon, Peace, who has also said good afternoon to us. Thank you for joining this podcast.
At Jepnik Investments, we're proud partners in building Zimbabwe's infrastructure, delivering quality road construction, earthworks, asphalt solutions, and civil engineering services you can trust. With modern equipment, experienced teams, and a commitment to excellence, we serve government institutions, property developers, businesses, and individual clients, ensuring every project is completed with precision, durability, and integrity. And now, we're excited to introduce a special promotion. Purchase a minimum of 20 bags of cold premix at just $7.50 per bag, together with Stable 60 for only $2.50 per litre, and receive free labor for your pothole repairs. Together, let's restore roads kilometre by kilometre. Jepnik Investments, building roads, building trust.
Professor Mugano, our conversation today is centered around issues to do with Zimbabwe's debt situation. We know a lot of African countries are struggling with debt and debt repayments. But maybe if we can look at the analogy of Zimbabwean debt, where did it stem from? Why is it has been sustained for so long without total repayment?
No, thank you very much, Rumbi. It's an interesting question and interesting topic as well. So from my assessment, we have 2 types of debt, and we call it public debt when it is combined. We have domestic debt, and we also have external debt. The 2 give you public debt. So our total public debt is $23.4 billion, which is 44.7% of our gross domestic product. So it's almost close to half of our GDP.
Let's be clear on the currency that you're using.
US dollars.
It's in US dollars.
US dollars, yes, yeah.
So our domestic debt is at
23.4 billion US dollars. Okay. That's our total debt. Yes, total debt, which is made up of domestic debt being $9.8 billion, and the external debt being 13.6 billion dollars. So external debt, these are huge sums of money which we've acquired from Paris Club. Paris Club, these are member states which offer loans to developing countries, about 22 member states, which include America, and most of them are European countries. Outside the European countries is Australia and Israel, and Japan as well. Then non-Paris Club is China. So with the Paris Club, I think we have about a debt of $4.4 billion, which owe them, which is part of $13 billion. And we also have owe money to multilateral financial institutions, which is your World Bank is $1.6 billion. Then also have African Development Bank, $700 million. Also owe money to European Investment Bank, about $400 million. So this amount of money totals then bilateral debt with China, Kuwait, So the total figure for external debt is around 13 billion. And the one which is in arrears, which is outstanding, because the other debt in arrears is $7 billion. So out of $13.6 billion, 6.6 is not yet overdue. Now,
Professor, before you proceed, how is it possible that the arrears that we have as a country have superseded what we are actually supposed to be paying back?
No, it's because of interest rate. Every year we were charged interest. So these are interest charges. And I actually noted, I think last year they increased it by about 400 million rands. So it's now in arrears. There are now penalties of defaulting. Just like when you borrow money from the bank, if you are in arrears, there are default charges, there's interest. So yeah. So but the challenge, what has happened over the years, we lost capacity to service our debt. Because we have 3 decades of economic instability, and our capacity then to service became difficult. Then I think I need to talk about domestic debt because it worries me a lot, in the sense that government owes the private sector, the private actors, $9.8 billion. And that amount of money is a challenge for business because already have taken out the oxygen from the companies. And essentially, some companies have closed. And that, answering also your question, where is it coming from? There's over $2 billion, close to $3 billion of what is called the blocked funds. These were resources, these are foreign currency liabilities which were owed by private sector and government due to failure to, when we had the currency changeover, they could not service those debts. And ironically, some of these debts under the blocked funds were caused by sanctions because the corresponding banks were not allowed to trade with Zimbabwean banks during the time of the heightened of sanction, to an extent that our banks could not then transact in foreign currency making payments. And then we got to a point where the economy, the hyperinflation also wiped out that money, and it became useless. And the government then had to assume this debt. So it's about $3 billion, part of that. Then this was then put into an arrangement of long-term bonds, which are maturing in 20 years. And some of these monies might mature in 2040 something, because it was assumed in 2021 through Finance Act, I think number 7. So this is where we stand. And my last point is that some of the debt which we have now, which is of concern, because every year now, which is now becoming a national security threat, is that we are assuming close to $2 billion of domestic debt. And when you look at it, it's because of government ministries, departments, and this will be my song, and agencies assuming debt without following due process. So you look at the Ministry of Finance reports that 2022, 2024, for example, we accrued $1.7 billion domestically, because ministries were violating public finance management system through corruption. And some of them were also overpricing, to an extent that some out of $1.7 billion, $222 million was going for roads, but not verified, not approved. $700 million was going for dams, right? You see already it's almost $1 billion for 2 projects. and $280 million was going for input support for agriculture sector, and again not verified, right? And then of course you have your other payments like Zimsec, $50 million assumed, not this is the official figures from government. And so if it then becoming worrying because you have already a bigger problem of a higher debt, and you then become reckless again in not following the public finance management. And again, you also ask where is the law enforcement agents in dealing with this animal called corruption?
Now, I think this brings us to the question that this user asked: what was the money that later became debt used for in
Yeah.
Zimbabwe? We've talked about the origins of debt moving forward, the domestic and external debt. What was the money used for?
So if you look at domestic debt, some of the monies were not used in good use. And that's to be very blunt.
Let's first talk about the good use the money was put to.
So the money which was borrowed from multilateral financial institutions such as World Bank, these are monies for infrastructure development. Because the World Bank is a bank of reconstruction. So it's clearly to support development work. And I think this is money which we assumed during the 1990s and the early reconstruction. So you see, we are renowned in terms of education. Many schools were built during the when we assumed our independence. And the universities also, we used to have one university. And so World Bank would give us kind of fund for development work, right? And
with conditions.
with condition, of course, yes. And I think we put this to good use because there's evidence to that amount of money. I will not be able to be eloquent to then break it down one by one because these are several decades, but it's for development. The same applies to IMF. We paid it, of course, back, but that's for balance payment support, which we get. So money from the multilateral financial institution, and part of the money there, which you see also on the debt issue, is from Afrexim Bank. I think it's $1.2 billion, and it's for trade and support. And this is money which has been coming through negotiation with central bank, and it keeps us going because for business to get foreign currency to support the imports of raw materials. And you can see when you look at our import bill, about 25% of our imports are capital machinery, which is very good. For you to import that, you need foreign currency. So we're getting that kind of support. That's to good use. Then, of course, domestic debt, there are some debt which have gone into good use. For example, when you look at the roads, which we have, the rehabilitation is very good. You see good work on the dams. Although we question now the pricing. For me, the question on the domestic use now is not the infrastructure. It's the value which has been placed on that infrastructure.
Okay.
To say, for example, when you look at Trabablas, it's a very good interchange. No one can question about that. The question now is what is the cost? So that debate around the cost is a debate of national interest. And the cost per kilometer of per road should be $1 million for new road, not for rehabilitation. So when you look at Bed Bridge, another Bed Bridge road, it's a rehabilitation. It's not a new road. It must not cost $1 million per kilometer. But when you then hear the figures now, you get alarmed to say, and this is documented. When you look at the circular by the Minister of Finance to say there's overpricing using parallel market rates. That's where the money was abused. And it becomes so big that sometimes government cannot service it. Lastly, when I say there was also an element of abuse, that where government was very clear in the circular to say decisions were made to assume debt without following the due process. And again, it becomes corruption. And so that's where we stand. And I think it's also qualified by the Auditor General report. And these are things which are under our control, which you must be dealing with as a country.
Right. Now, in some instances, as an individual, when I owe a debt to an institution and I get to a point where I'm incapacitated to pay, there are means and ways of making sure that this debt does not accrue accrue any interest. And I'm hoping it's a conversation we can have after we come back from this commercial break.
You've got Zik and you want to own and drive your brand new Toyota Hilux, do not worry. Enigmatic Motors has got you covered for Zimbabwe Gold Current is working very well. In the past year alone, we sold 63% of our stock in Zik and our customers were excited. To hear more about our offer, please get in touch with us on 0717 409933 or 0717 434 349. We are in Harare at your service. Thank you.
Welcome back to the final segment of the Market Watch podcast, proudly brought to you by the Africa Economic Development Strategies. We are talking about Zimbabwe's debt situation, trying to analyze it just to find out where are we going wrong and what are we also doing right. Because when you're talking about debt, it's not entirely a bad situation. So before we went for the commercial break, Professor, we talked about how when I am dealing with personal debt and it accrues to a certain extent that in the institution where I got the money from or the institution that I owe sees that I am incapacitated to pay back. They stop the interest rates and they make sure that it's just an amount that is solid and not accruing any debt. Now, isn't Zimbabwe ripe for that kind of discount?
Yes and no. Depending on which strategy are we taking as a country to address the debt issue. So no, if I'm looking at the situations where one would want to go for the heavily indebted poor country status, what we call HIPIC. I'm sure you once heard during the government of national unity, government of Zimbabwe pushing the agenda to go into heavily indebted poor country status. You know, if you look at the phrase a heavily indebted poor country status, it's a country which is done, right? It's
Okay.
done. It's in a state of misery where even life expectancy is around 30. Income per capita is very low.
Out of interest,
Yeah.
would you know what our life expectancy in Zimbabwe currently stands at?
Yeah, we are above 60, so we are good. We are good. We are good. We are above 60.
I was just checking.
Yeah. Even in our reports, we should be around 65 years. So we, in terms of human development indicators, we are quite good on life expectancy. Then in terms of income per capita, we are around $3,300. So we can't qualify for heavily indebted poor country status. We are not in that category.
So what do we qualify for?
We qualify for debt scheduling, which is the essence of yes, where I would say yes or no. So normally the HIPIC, I want to go to HIPIC first. If you go for that arrangement, it can be written off, right? And
Is this what they call ODS debt?
which one?
When you get into the state of being declared HIPIC, what is the difference between being in that category and having what is known as ODS debt?
It's the same. It's the same. It's like a person who have no, what can I say? Because in HIPIC, you are in a situation whereby there's no future. There's nothing. You have to be sympathized with. Right. Yes, exactly. So where we are, and which is the right way to go, where I say yes, it's a debt negotiation. We are negotiating for rescheduling the debt. In actual sense, we are simply saying the debt, which is $7 billion in arrears, give us more grace period. So these are various debt strategies, right, of addressing the debt, right? And that's why government has engaged the African Development Bank. And we are also working with the IMF in that regard. Is part of the multilateral financial institution supporting Zimbabwe debt resolution. Last week we were talking about the importance of staff monitoring program and why it is important for us to have a staff monitoring program, particularly on debt resolution. And you need that kind of arrangements where you could actually do reforms to show that there's a good cause for you to be given more lenience. So if the debt is taken out of arrears to say, now we are not writing it off as in HIPIC, but you're going to pay it, but it gives you more time. So it therefore takes away the default charges and the higher interest penalties, and now you can actually get fresh capital because you also want to get more liquidity to support that. This is where we are as a country.
Is it actually a good thing that we're in a debt situation we've been unable to get out of, and we want to accrue more debt by being given more lifelines? Because I feel like it's an addiction, it's a drug. You keep wanting more. Are we not in that state where I do not want to use unorthodox words to describe what I want to say, but are we not in a state of addiction?
Look, I think for us, what the issue which we want to deal with is discipline more than acquiring new debt, because already there's an aside which I will come back to once I address this idea of discipline, that we need the discipline that whatever money which we get, we put in good use, and we need actually capital. The National Development Strategy 2 is talking about economic transformation. We need the capital for economic development. We need capital for retooling. We have high concentration of raw materials to the extent that over 92% of our exports are raw materials, driven by agriculture, 22%, 70% are minerals. And we cannot develop without that. So what is lacking is capital, long-term finance to put up new industries to deal with the value addition and beneficiation. So we need capital. That's not questionable, but it must then go to good use. So, and we cannot, it's always very difficult to say on one end you want to service the debt, what we call token payments, which the government is doing. On another end, you want also to make finance or resources available for funding infrastructure or investments into our economy. But also there's one side which you need to deal with there, to say, one, we need also to reduce the size of our public debt by controlling the growth in domestic debt. Clearly, that's an area which we don't even need to go and engage with IMF. It requires our internal systems as a country, law enforcement and political will to stop corruption and abuse of public management system. I'll give one simple example. If you look at the public finances last year in July, when the Minister of Finance presented midterm review of the budget, our domestic debt was $8.8 billion US. That was July, right? And the 3rd September, same year, 3 months down the line, our domestic debt was $9.8 billion. So if you look at 3 months from July to September, we have accrued $1 billion. That is recklessness. So how do you stop the debt when you're acquiring? Because one effective strategy of stopping debt is to stop acquiring new debt. Yeah. So I addressed you on the external side that I would rather want more debt to finance development, right? We need long-term infrastructure. We need capital. But you cannot acquire new debt domestically, which you cannot explain because you have contracted service providers and you can't pay them. And you do it in a reckless manner that in 3 months you have $1 billion for Zimbabwe, US dollars. And that's not, it's an issue, any of worry.
My worry is, why do we keep giving debt to a person we clearly can see is incapable of actually clearing their debt, or at least committing to clear the bulk of the debt? That's my first question. Because when I look at the Zimbabwean situation, yes, I do appreciate that we've come from years of turmoil, economic turmoil, and we have been trying to deal with the debt situation. However, kana munhu taona kuti ane chikwereti, uyu akutadza kubhadhara. Paya tambotaura kuti tinomunzwira tsitsi. Tobva tamuti iwo zvechikwereti chireka. Is this not the stage where we're supposed to get it? Because clearly it's not just Zimbabwe, but if you look at the trajectory of African economies, they're already struggling.
Yeah.
And to whom do we owe this money to? And
Correct.
how did it even get to a debt situation? Some would want to call it the debt trap.
Yeah.
Dambisa Moyo calls it a debt trap that Africa will never get out of. So how is it that we owe people money, or rather some say we owe ourselves our money?
So from where I stand, I think let's look at two things. Let's look at our failures in the past and our current failures as well, and take them head on. And this way, I'm not shy to say we failed to deal with the corruption. And this is an area which we need to decisively deal with. And we cannot stop acquiring new debt, whether we are given external funds or we are given, we are acquiring domestically, as long as that animal called corruption is not dealt with decisively. That's number one. Number two, let's look at the economy. What does the economy need? It needs fresh capital. So it needs a disciplined people, it needs a disciplined government, it needs effectiveness in terms of implementation of our instruments at our disposal to deal with the corruption. Now, remember, let's connect this with the staff monitoring program. The reason why I was quite happy with the staff monitoring program is that we were developing a reform agenda. We are developing a reform agenda, which is monitored by staff IMF.
Yes.
So that is their template which are going to say, now I am reforming, right? We are dealing with the corruption. So if you look at the areas, remember what you did last time, discipline in finance, moving the account of government to creating what they call treasury single account at central bank, which we discussed last time, so that the government or Ministry of Finance is in charge with the funds and resources to avoid ministries from abusing that. These are maneuvers which Treasury is working on with IMF to deal with corruption. But that is at a software level or at a processing level. I would want to see more movement in terms of enforcing rule of law and dealing with the corruption, so we can be able to stop this abuse. Because the question remains valid as long as the animal called corruption is there. But should we say as a Zimbabwean, should we go to bed and sleep and say we don't want a new capital? No, we can't say that. But at the same time, we are worried if they don't do with corruption. That's why we are having this conversation. And I like the way you are pushing it. And also, one listener also said the same thing, that to what extent corruption can destabilize this. I think it's a good observation. And the worst thing about it is that if you look at then who suffers in the debt, look at how the treasury bills has been used as vehicles of managing the debt, where treasury bond, which is maturing 20 years. Imagine private sector's money is blocked now, and now you are going to get your money in 20 years. Some companies have gone down, then we have unemployment. And we also hear that treasury bills are being discounted in the market to an extent that discount rates can go as far as 60%. To some extent, we hear 85%, which means if you are holding a paper worth $100 million, and if the discount rate is 85%, it means you are getting $15 million. And the one who is buying it will get $100 million. So again, it's becoming again a debt area, which has actually nullified the theory which we learned at school that treasury bills are a risk-free asset. So this area needs to be cleaned for us to move forward as a country. And we must never be apologetic about it, that we need to deal with it head on.
Right. Now we get to the part that's very interesting for me. We talked about issues to do with accumulation of debt, debt management, and you talked and indicated that corruption is one of the main drivers of the debt situation that we're in. Apart from corruption, what are the other issues that are also trending that feed into Zimbabwe's debt situation?
No, thank you very much. I think if you look at our current debt, remember it's historical part of it. To an extent that, if I look at the numbers, let's look at the blocked funds. They are about $3.5 billion, driven by hyperinflation. which we witnessed in the last decade in particular, to the extent that government ended up assuming that debt because of currency changeover, which has seen companies losing their money, and the government took responsibility. It's an economic issue. It's a crisis caused by the economic challenges. Then the other driver is, you recall when we had our ESAP, we were asked to reform the economy. And ESAP, Economic Structural Adjustment Program, backfired. And we were supposed to get lines of to address the negative effects of ESAP. And I remember that when you look at the literature, around 1999, we got an approval from IMF and World Bank to support the Zimbabwean economy as a fresh capital to address our economic crisis, which was building because of ESAP, was liberalized. Before ESAP, we did not have a term called informal sector in Africa, not in Zimbabwe alone. So the informal sector became a new industry because of joblessness caused by backfiring of the reforms. And that money which we were given, before it was disbursed, it was then blocked because of sanction. So we remained with an economy which failed to work. And also our instruments in our system also became bankrupt, and we had a debt. So the debt which we have today, some of it dates back during the Smith regime, which we adopted at independence. So it's a long history, but I think we have capacity to deal with it if we pull ourselves together as a country. And as I said, it doesn't make sense to say every year you accrue 2 billion through corruption and through wastefulness, yet you have a bigger problem on your hand.
I want to play the devil's advocate and say, you said some of the debt that we're dealing with as a country dates back to the time of the Smith regime.
Correct.
Why are we being made to pay for a debt that was accrued by a government which is not the independence government?
That's an interesting question. I think it's also political, in my view. I would have wanted to think the same, that this was not our responsibility. But they left the country for us, right? We have the infrastructure. Because remember, the current infrastructure which you are seeing, particularly the industry, the roads, was put up by the Smith regime. Yes, we are building on that. But it is also the same question I have. I share the same sentiment on the white farmer compensation deed, where we have $3.5 billion debt. And this is not a debt which we could say we got the money. Again, it also explains your question to say, how is this debt? What are the major drivers? We made the commitment as a country to say we are going to pay white farmer compensation. I see it as a demonstration of respect of property rights, which is critical for international engagement. But on a moral side, I have difficulty with that. Because honestly, this is ideally, in my view, the British were supposed to compensate the white farmers. If you look at history and on the concessions we made towards independence. So, yeah, I think it's a difficult one. I could have stick to, because you can't say, because the question which arises political is to say, who is going to compensate the black farmers who lost their land during the 1931 Land Apportionment Act, and they have lost their cows and their beautiful women and the settlers and whatever. Who is going to compensate? Yeah, because it's a fair deal to say, why is this unbalanced? But I think, in hindsight, I think government could have thought otherwise on this one. Because what was going to happen? If you say we have no capacity to pay the white farmer compensation deed, we can't pay $3.5 billion, and going back to your question of say we have no capacity, in my view, I think this was a miss, in my view. Yeah.
An interesting discussion we're having, Professor, and I definitely had to bring up that question because it also leads me to another interesting one, but we'll probably shelve that one for another day
Okay.
because I would have wanted to go a little bit deeper. But when we're looking at the debt situation, do you think Zimbabwe has got the capacity to actually and eventually repay the debt that it owes?
Zimbabwe has
Let's
got,
start with external.
yeah, the external debt. We have capacity to pay that debt, particularly if we deal with corruption, number one. There's documented evidence that we lose $1.8 billion every year through illicit financial flows. Yes, I'm aware that any money which gets out through illicit financial flows is private sector using transfer pricing, and also people were smuggling gold and other precious minerals and money. Yeah. So if we domesticate that money, obviously it doesn't mean to say 1.8 billion will come and to government coffers. It's private money which is being taken out. But if we domesticate that money or account for that money, it will have a multiplier effect, which will help us to tax it and have money to pay our debt. So in actual sense, we are simply saying we are losing $1.8 billion. If we domesticate it and we account for it, it's in our banks as a country, the multiplier effect, which was last estimated by central bank, is 9.43 times, which means a dollar, if it goes through this economy and it comes back to the bank, it would have cost an impact of $9.43. So you can imagine 1.8 billion dollars every year, multiplied by 9.43 times. You're talking close to $20 billion, which can change hands in Zimbabwe, and we pay VAT, we pay 2% tax. Treasury will get more money and have more capacity to pay the debt. The second one is the issue of value addition. I think last time we once talked about tobacco as a good example. So tobacco, if we value add tobacco, we can hit $60 per kg. And that will give us capacity to multiply the value of tobacco by 15 times, which we are exporting, because we export about $1 billion a year. So if it $4 on average per kg, right? So if we are value adding, it means we're talking about $15 billion. And if we use excess duty and VAT there, in 5 years we can clear this $7 billion. Then the last one is production. We spend $4.5 billion on importing US dollars, importing your toothpicks, chewing gums, Pampers, tissue and paper. Tissue and paper, we spend about $200 million, tissue and paper. And that's not an aeroplane, by the way. So the list is endless. Syria was $600 million. Fertilizers about $300 million, $350 million. Pharmaceuticals, $250 million. Soybean, over $200 million. If we domesticate these value chains, you can imagine what happened to VAT, payee, the 2% tax. Treasury will be real treasure. There will be a lot of money. And the capacity to pay the debt will be there again. So we just need to execute the National Development Strategy 2, because the frameworks for domestication of local value chain are there. The issue of value addition and beneficiation are there. So we just need to execute. But we need also to build strong institutions, which will help us to deal with corruption, to have teeth. We need to build strong institutions which will help us to address the ease of doing business. We need to build a strong institution which will help us to allow a fair level playing field where everyone is working. There's conducive business. And for me, I think it's high time that we show that we are educated as we are in Zimbabwe. We are known. We do wonders. It's not a secret. Our Zimbabweans in the diaspora, they are in high offices all over the world. Zimbabweans at home must rise up and just do the right thing. Good governance, execution, economic patriotism, and we must deal with corruption.
Definitely interesting, and it's coming back once again. Time and time again, the issue has always been centered on what we need to do as a country with regards to corruption. We need to make sure that we remain committed to seeing through the debt repayment. So the IMF they just concluded the staff monitoring program, which it said was a success, and Zimbabwe has met some of the critical benchmarks. But we're also continuing to have the debt conversation to see how best as a country we can also contribute, as a citizen, how best we can also contribute. And one of those things is we have these discussions as we build consensus around these issues as a country. Professor Mugano, I want to thank you so much for joining me on Market Watch this week.
It's my pleasure. Thank you for having me, Ruby.
We will continue to bring you more interesting conversations, but make sure you do hit the subscribe button.